Hey, this is attorney Elizabeth Potts-Weinstein. Today we're going to talk about how to pay yourself as a sole proprietor. So if you own a business and it's just you and you haven't formed an LLC, a corporation, or any of that, then you automatically have a sole proprietorship. You can also file for a DBA or an FBN if you want to use a business name that's different than your name, but it's still just you. The legal aspect of the business is just you. So technically, paying yourself, you could just have all the income go into your personal checking account and then just spend it. But that is a terrible idea. And it's a terrible idea for a couple of reasons. First, you need to set aside money to pay income taxes, self-employment taxes. Second, you need to set aside money to pay for the expenses of the business. You're going to have some expenses that are monthly expenses and some that are just once a quarter or once a year, and you need to make sure money is set aside for that. And third, you need to track things in your business. It's very common for people to have a one-person business and they don't actually know how much money they're making because income comes in, you spend it on business stuff, you spend it on personal stuff. Are you actually making a profit? How much profit are you actually making? What part of your business makes money? It may be just a big, giant mess. And it's very difficult to make business decisions if you don't know how much money you're making and where you're making it. So how can you pay yourself as a sole proprietor in a way that's going to be helpful for you and keep you from messing things up? So the first thing that I would have you do is open up a separate business checking account. As I said, that's not legally required, but it is going to make so many things easier because then for that business checking account, the income goes into that business checking account, the expenses go out of that business checking account, expenses for the business, and then you write a check or do a transfer, it doesn't have to be a check, from that business account to pay yourself. Then you know exactly how much you're paying yourself, what the income was coming in, what the expenses are coming out because they're there on the bank statement. It actually will help simplify things for you so much in the end. Now, you also may want to have a separate PayPal, a separate Venmo. You may want to have a merchant account to accept credit cards like through Stripe or Square. I know for Venmo, you definitely want to have a separate Venmo for your business because your personal Venmo is not supposed to be used for business. For PayPal, you'd also really want a separate PayPal just for your business. And this is about the terms of service of those companies and less about from a tracking perspective because the income from those should be going into your checking account. Don't ever leave income in Venmo or in PayPal because that is not insured like a bank account. And they can yank that stuff back. That is a terrible idea. You always want that money to come out on a regular basis. You know, it depends on how often you get paid. It could be weekly that you roll it over into your business checking account. Number 2 is have a separate credit card for your business. It's very common for sole proprietors to use their personal credit card for their business because they and the business are the same thing, but it makes tracking difficult to do. So if it is possible, either just have one of your credit cards that you just use for the business. So there's no personal stuff on there. You just use business, but it's your own credit card. You're personally liable anyway. Or get a business credit card. You might start out with like an Amex card, one of those old school green Amex cards that have to be paid off every month. But then the expenses go on that credit card. And the reason you want to have a credit card for expenses and not just use the debit card for your checking account is because it's better for doing business, for paying for things online, because the credit card company will advocate for you way more than your debit card will with your bank. It's not money that's coming out. It's on a credit card. So that way you have a little bit of a buffer if you need to dispute something. And it actually makes it, and there's also a lot of places where a credit card is much more appropriate and works much better than using your checking account. Number 3 is to pay yourself on a regular schedule. In the beginning, you may not be able to pay yourself the same amount every time you pay yourself, but you could have a schedule to pay yourself. So every week on Friday, or every month at the last day of the month, or once a quarter. I mean, there's no right answer for how often you should pay yourself. It just is what you're comfortable with and what works for you in your business. I've had times in my business where I paid myself every week. And the reason was that my business had so much ups and downs, it was helpful to make these decisions on a weekly basis for how much I can pay myself. Okay, I see how much money I made last week, then I know how much I can pay myself. And it was better to do it on a weekly basis. But I've also had times where I pay myself twice a month, and even at times I pay myself once a month. And there's pluses and minuses for each of them. It really depends upon what you're comfortable with. But the thing is, having a regular schedule is very helpful. Now, maybe this Friday you can't pay yourself anything at all because you made no income in your business. There's nothing wrong with that except the fact that it sucks you can't pay yourself, but you legally don't have to actually issue yourself a paycheck anyway. So the idea is this is a convention you're coming up with, so you look at whether or not you can pay yourself. This will also be helpful if you convert your sole proprietorship into a S corporation, either an LLC tax as an S corporation or a corporation tax as an S corporation for tax purposes to save money on taxes, because then you will be doing a formal paycheck and it will need to be on a set schedule. The amount doesn't have to always be the same, but it'll have to be on a set schedule. So it'll try to train you for how that's going to work. But then how do you figure out how much to pay yourself? Okay, now let's get into that. Number 4, you need to keep some kind of log or spreadsheet or written down on a piece of paper of your regular expenses. So you're gonna have some expenses that are every single month. That's to host your website, for example. You're gonna have expenses that are every year, like your business insurance might be once a year or twice a year, or your domain name for your website. You need to figure out when all those expenses are due, especially the things that are once a quarter or once a year. Oh, that big expense to pay your insurance, it's $500 and it's due in April. Okay, versus these other expenses that are every month. And then you can calculate what is your overhead. Maybe you have, once you add up all the annual expenses and divide them by 12, and then all the monthly expenses, you have $500 a month of stuff, of expenses, some of which will come out every single month, and some of which is kind of like saving for the next time it comes out on an annual basis. So you need to know that if you get paid $1,000 of income, 500 of that is going to your expenses. So then the other 500 you can pay yourself. See what I'm getting at here? Now, it is in the beginning when you're doing this, you also have to look at when those expenses go out. So if you're doing this calculation in March and your $500 bill for your insurance is due in April, then you need to also set aside money for that because it's not going to be able to build up over the course of the year. But the idea is that as you do this over time, you're going to realize what your overhead is to pay for all your expenses. And then once you've made enough money in that month to pay for the overhead, the rest of it is yours, except for number 5. Number 5 is you need to set aside money for taxes. Now, this is hard because how much taxes you owe, I can't tell you how much taxes you owe because it depends on your personal tax situation. You're gonna have income tax and you're gonna have self-employment tax. Self-employment tax replaces all the FICAs and Social Securities and stuff like that that come out if you do a paycheck. And right now, I don't have a sole proprietorship. I have an S corporation. So I don't have to worry about self-employment tax because I have a regular paycheck that does Social Security and FICAs and all that jazz. But if you're a sole proprietorship, you have to set aside money for income tax and for self-employment tax. You might need to do quarterly deposits ahead of time. You might be able to do it just at the end of the year. It really depends on how much money it is. And it also depends, do you have other income? Are you married and your spouse has other income? Do you have a day job and this is just your side gig? Hopefully, you'll be able to figure out a general percentage of how much of your money you need to set aside for income tax and self-employment tax. The self-employment tax rate is 15.3% as of the time I'm recording this, which could change in the future, probably will change in the future. Income tax depends on how much money you're making, right? And it's taxed differently based on each additional chunk of money you're making is taxed at a higher rate. So it may be that 20% of your money goes to income tax, maybe that 40% of your money goes to income tax. It wildly depends on your rate and what your tax deductions are. But the idea is you can figure out over time, you can use different calculators that the IRS provides, and I can also link to some in the description below, to figure out a rule of thumb of how much money you need to set aside. And you may need to set aside a third or 40%, something like that, into either a completely separate account, a savings account that you have attached to your business checking account that is for taxes, or you set that aside, you just leave it in your account, but you note that it's set aside. It can be best just to transfer it over to a different account. It depends on if you're going to have the discipline to not accidentally spend that money, right? Now, whether or not you need to do deposits of that on a quarterly basis, it depends on how much money you're making, how much money you're making in it for everything else in your life, and how much taxes you paid last year versus this year. I mean, it is a complicated thing that I can't answer that applies to everyone, but that is a calculation you'll need to do. So hopefully the idea is that if you get paid a certain amount of money, let's say a client pays you a check for $1,000 on the first of the month, you'll know, okay, $500 of this is going to expenses. And then of the $500 that's left, I'm going to take 30% of that and put it into the savings account for my taxes. And then the rest of it you pay to yourself. And then a client gives you a check for another $1,000 later in the same month. You don't need to take $500 out for expenses. You pay yourself a third of it in your income tax savings account, and then the other 2/3 you pay yourself. That's kind of the idea of how it's going to work for you. And this is a calculation you would do every time you want to pay yourself. I highly recommend that you keep your business money separate from your personal money, because this will be helpful for you to know, are you actually making money in your business, where your business money comes from, doing your taxes at the end of the year, and then it'll also be helpful whenever you kind of up-level your business to be taxed as an S corporation in the future. Again, this is attorney Elizabeth Potts Weinstein. If you have any questions about what we talked about today, please feel free to post them in the comments below, and I'll try to point you in the right direction. Thumbs up if you found this video helpful. Subscribe for more videos like this. And if you have more questions, like to connect further, you can join the Patreon or sign up for the Discord. Links are below. Thanks a lot for watching. Bye-bye.